What's going on, everyone? So we got to talk about what's going on inside of the SPY, the S&P 500, because so much was going on in the stock market today, and now we have the Fed meeting coming on Wednesday, the 7th. So we got a lot to talk about today. So let's first start with where we started at today. So we started all the way back here. So we started at a pretty low level. We left Friday off pretty bad. We dropped going into today. And yeah, today, Monday, we came in strong at first. So look, we came in strong. You can see here it was definitely expected that we would drop leading over the weekend because the MACD was just showing all of that bearish movement there. And we can also see an RSI as well. But we came into the day strong. So look, we literally closed just about the same level that we started at. So almost like we closed a little bit higher than what we started at. You can see post market, we're literally at the price where we started at. So it's going to be an interesting day tomorrow and on Wednesday leading up to this Fed meeting. But look, we had a lot of growth throughout the day. We went strong. We were going strong, went all the way down here from about 562 all the way up here to 566 on the SPY. But you can see after this time period here, we just started going down after 2 p.m. We started going down, 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 and down. So I'm really big on making a bunch of resistance and support lines. So I make my little macro and micro resistance support lines. And I also have the main ones set up too with our Fibonacci retracements, right? So right now we're looking at the 1 minute chart because I have a lot of different areas here that I'm watching out for. And one of them that we just now broke here was $563. That's a huge support for us because now the next support after that is going to come all the way down to 558 if we do continue to go down. There's some micro support areas in between, like right here around 560, 561. That is a micro support area, but I really don't like to depend on a lot of these micro support areas. And you might not know what I mean when I say like micro support, but I mean like the minor support areas. So this one's really, really minor because you can see previously in the past we've used it as resistance sometimes, and we've also used it as support. And there's a reason why I'm looking at the 1 minute chart. So I'm going to show you guys different charts soon. But you can see we used it as resistance here on the first. We also used it on the 30th as resistance. And then we used that same level again here later on in the first, like multiple times on the first. And then we used it again here later on with the first. And then you can see again here on the first using it as resistance. So then it was used as support leading to the end of May 1st. So you can see we had that level a lot of times. So that's a good micro support line for us to go to, a good minor support. Now, I know we're on the 15-minute chart. I just kind of wanted to show you guys what we were doing on the shorter time frame here, because you can also see here on the MACD, it looks like it is kind of ready to cross. You can kind of see here on the MACD that the volume, it started to get a little bit more volume towards the end, and we just kind of closed off on a bad footing. But I think going into tomorrow, we might actually have some good movement, and you can just kind of tell, like, look, on the MACD, we're actually curving upwards here. So we're going to be curving upwards here, and tomorrow we should be having some good strength because on the RSI, we're doing the same thing as well. A little bit oversold on the RSI. So with all that being said, we got a lot going on. So now that we got that out the way, let's do the 15-minute chart, right? We got the little small 1 minute chart out the way. Now let's look at the 15. So now looking at the 15-minute chart, we have a lot of different options going into Wednesday, right? Tomorrow's Tuesday, right? But going into Wednesday, we have a lot of different options. So let me just kind of explain to you what I'm seeing here on this little 5-minute chart. So the 15-minute chart. The 15-minute chart is looking, is looking a little scary right now, right? And I'll tell you why it's looking a little bit scary on the 15. So for one, we could quite possibly be creating a downtrend line, right? We could be creating a downtrend from where we are now. Let's just say, hypothetically speaking, from here down to wherever we're going, right? Let's just say from here to like later on in the month, we're just going to be trending downwards like this, right? This is what it's kind of looking like right now. Because this downtrend line, let's say if we respect this and we do not end up breaking past it, then we're definitely going to trickle down to the bottom of that trend line. And look, this is a trend line that I've created and that a lot of people are always talking about. And don't mind all these little micro little support and resistance levels. I like the day trade. But looking at these little areas here, so we can see that we touched this trend line multiple times, and we might be pulling back because you got to think about it. The Fed is probably going to end up pausing the interest rates. Now, let's talk about what would happen if they paused and what would happen if they actually lowered interest rates. Okay? So, if the Fed pauses interest rates and they do not lower the interest rates, we're more than likely going to have the pullback that I'm talking about. And we're more than likely going to end up pulling back to the trend line here. But remember, all the other reports that we've gotten haven't been too bad because we haven't really seen the full force of the tariffs. We only got the first quarter reports, right? January, February, March. But we don't know anything about April right now, May, or June. And we're going to find all that out in July. So my prediction is this. If we actually end up pausing, I believe we may do something where tomorrow we go up here to 575, or we go up here to one of these resistance lines and we just, leading up to Wednesday before 2 p.m. on Wednesday, of course, we eventually end up getting to 576, maybe past that to 584, right? And then we get the news that we're pausing. Boom. We're pausing interest rates. So then that's when you start see us trickling back down here to this trend line. And then from there, we can decide whether or not we're going to end up breaking that trend line and moving higher up. So that is what we're going to have to face if we're going to end up pausing. We might see something where we just rally a little bit before the pausing decision, before the Fed meeting, and then Fed meeting hits, boom. And now we go back down to that trend line, pretty much bringing us down to 551, right? Either bringing us down to 551, or if it's almost straight down, like almost immediately, you may even see something where it ends up bringing us down here to 543. So let me show you what that would look like. So I really like the 543 support a lot more. I like it a lot more. So look at this. Check it out. So if we were to get down to 543, right? Let's say we go into the Fed meeting on Wednesday and things are just crisp, nice, and dandy until then, right? Tomorrow we do good. Wednesday we do good up until 2 p.m. And then boom, Jerome Powell hits us with that. We are pausing and we are not lowering interest rates, right? Leading up to that, we're going to look like this. We're going to be looking so nice. Boom. Maybe tomorrow we get up to 567, 570. And then on Wednesday we get to 576. And then we just start rallying to 584 leading up to it because people are like, yeah, they're going to lower interest rates. They're going to lower interest rates. And let's just say they don't lower interest rates. We would either stop here before 2 p.m. or here. But either way, what it's going to look like is a drop from here down to that trend line or a drop from here down to the trend line. And if we drop from 576 down to that trend line, it might be an almost immediate pullback because remember, it's the 7th. The meeting is on the 7th. So it's going to be at 2 p.m. on the 7th. So let's say we just shoot up for tomorrow, right, which is going to be the 6th. And then going into the 7th, we then continue to shoot up a little bit more after pulling back a little bit, right? So it'll look something like this, and then we would be up there, right? And then, boom, news comes in, boom, we get rejected, and now we go down. And then on the 8th, we go down a little bit lower. And then on the 9th, you think we're going to go up because we start off really good in the pre-market. But then, boom, aftermarket goes down, and then, boom, Monday hits. And then, boom, Monday is the 12th, I believe. So now we're looking at the 12th, which is Monday. And, yep, so the 12th is Monday. So, boom, the 12th hits Monday, goes down even more. People are like, oh, no, this isn't good. This isn't good. It goes down even more. And then, boom, Tuesday comes in, 13th. We start rallying. People are like, no, we're good. We're good. Let's go call. So let's all go on calls. Let's buy. And then, boom, towards the end of that market day, it goes down even more. 551 hits that trend line, bounces up even more. And then they're like, no, we're good. Breaks the trend line going into the 15th, and then going into the 16th, finally, it hits around here on 542. I feel like that could be a possibility if they pause the interest rates. And look, like I said, I'm not a financial advisor. None of this is financial advice. This could be what's happening. Me personally, I'm more on the put side of things, but I know how to do things like very relatively safely. So I have my puts set out till next year, right? My puts, I don't like doing slow, like short expiration dates. Mine, boom, set all the way out till next year. So I have puts set all the way out to next year, but I also have short calls that I'm doing that's set for the expiration date of July because I'm really betting that we might have some rises coming into the market leading up to this meeting. And I'm really trying to sell my calls here and then buy more puts up here. So if I buy more puts up here and then we continue to pull back, or if I wait and then I buy it at 584, if we keep rallying and it pulls back some more, then I can really benefit off of both of the puts, because I've already opened up the puts all the way down here. Like I've opened up puts somewhere in this area. I got to look at it. But I already opened up the puts. So the puts are technically down. But if we go into the next, day and we're rallying, I already have my calls open as well. So I have both puts and calls open. So I'm really betting on it rallying before we go to this meeting, because if that happens, now I'm making money on the way up for the calls, and then I'm going to buy more puts up here, and then that's going to make my break even at a way better price, right? My dollar cost average is going to be way better, all right? So that's when I'm going to, well, technically it's going to be higher because I'm doing puts, right? Because my dollar cost average. So yeah, I'm going to be doing that, and then my dollar cost average will be a lot better, and then it's going to break even somewhere around here, and then we're going to keep going down. We're going to make profit all the way down to 543. That's the hope, right? But let's say they cut. This is when things could get a little bit spicy. Let's say the Fed cuts interest rates on Wednesday. If the Feds cut interest rates on Wednesday, we're probably going to be rallying leading up to it. And then people are like, okay, now they're cutting. What's about to happen? What's about to happen? They're cutting. And then out of nowhere, boom, Fed cuts interest rates. Boom, 584. Going in the next day, boom, 590. Going in the next day, boom, 600. Getting all the way up to, and then eventually pulling back, to get that momentum back, right? So if the Feds cut, you can bet that people are gonna be pushing this up. Like it's gonna rally if the Feds actually cut. But most people are predicting that the Fed's not going to cut, and the Fed has said in their last meeting that they're more than likely not going to cut now. And just because Trump's trying to bully Jerome Powell, I don't think he's just going to bend over and do what Trump says. So I think the Fed's going to pause. So what I'm looking at here for the 15-minute chart currently, I'm looking at the MACD still, and it does look like we may be seeing some more pullbacks here. So I don't know. Maybe my puts start printing before my calls, and then we start rallying, and I end up selling my puts for a little bit of profit, and then I double down on the calls, or vice versa. So I like to do that strategy when I'm swing trading, because at the moment I'm swing trading. I like the day trade, but I'm swing trading right now. But yeah, there could be a situation like that where we see it pulling back a little bit more, just looking at the MACD. But when you go over here and you look at different time frames, like if you look at the hourly, like it looks a lot different. Like you're kind of looking at it and like, okay, there may be a little bit more juice to the upside, right? Like let's say like we just start to curve down inwards here on the MACD, and then it doesn't go all the way back down, and it just starts rallying up again. And then you're in overbought territory, but then you're going to start seeing it rising a little bit more. That crash is going to be even more hurtful. Like it's going to hurt people even more. Just look at what happened all the way back here on this crash. So we pretty much were going sideways for a while here. Like from here to here, like it was a bit sideways from about March 12th to March 28th. Yeah, we had some upwards movements, but we always came back to that same level. So I would still call it like a sideways choppy movement. And that's something that we could end up seeing. And that's actually kind of what we've been seeing a little bit here, but it's been a lot of uptrends, like very low volume. As you can see here, it's been very, very low volume. Look at the volume down there. The volume is so low, but we're still increasing in our prices. How is the volume so low, yet we're increasing in prices? Make that make sense. It really does not make sense. Like, look at it. The volume is low, and now we're seeing an increase inside of selling volume. But even all of this, like this was such low volume, but we're still increasing because not many people are really selling at this area. Like people were just buying, but there wasn't much sales coming in. What happens when the bears come in full force? Because there's not enough bulls, as you can see. Like when the bulls show up, they show up with that one big purchase and it shoots it all the way up, right? But then a little bit of bears come and then it sends the price down. Just a little bit of bears, not many, and it sends the price down. Then that one bear comes and it sends it down even harder. You kind of see the same thing here. Not many bulls here, but not much volume either. So it slowly but surely increases. And then that one bear comes and it just messes everything out. And then some bulls come to pick it back up. So all it's going to take is a bunch of bearish people inside of this just selling, selling, and selling. You can kind of see the change. Like, look at these candlesticks. Big green candlesticks here, big green candlesticks here, big green candlesticks here. and then another one here. But then look at how this changes. Big red candlestick, not as big though. Another big red candlestick, not as big though. And then another big red candlestick, still not as big, but you could see the difference. A lot more buyers were coming back in to save and push up the stock here. But you start to see those candlesticks become smaller and smaller and smaller until they transfer over here to red candlesticks, because now you're starting to see selling is more prominent at this level. So the closer we get to that resistance up there, the closer we're getting to major sells. Okay? So now when I bring this out to a larger time frame, I don't really like having all this out for this time frame because it just messes with the flow of things. So let me delete these. But yeah, when you bring it out to this larger or the smaller time frame or the larger time frame is gonna look a lot different for you. So now when you look at it, the main resistance we really want to be watching out for, and that's why I said this is a major level. Like the other ones are micro levels. That's why I took out all the micro levels, all the minor ones, right? But 575, 576, this is a major level. This is a major level. That's why I'm really paying attention to it, because we should be there by Wednesday. And then on Wednesday, that is going to be the decision. If we break past that level and we start rallying up towards 584, okay, cool. We're looking bullish. We're looking very bullish at 584. If it passes 584, then it's almost little to no resistance back up to about 595. And then if it passes around 590, 595, it's getting back up to 600. So that's what I'm saying. This is a very important area going into Wednesday. So now I'm just going to kind of back everything up here and show you what I'm looking at for really the long term. Because remember, I mentioned I purchased calls, or I purchased puts, but I purchased them all the way out until January of next year. So since I purchased those puts all the way out till January of next year, let's say we just start running. Let's just say we start running, we break this, and we keep running and running and running. We're going to get rejected eventually. And coming July, we're going to have the second quarter results. The second quarter results of all of these tariffs. All of the tariffs. Like, think about that. Everything. So we already had January. We already have February. We already had March. But coming in July, now we're about to have April, May, and June. And we're about to get the results for that in July. And that's when all this tariff stuff has really been doubling down. So when you think about it, I set my puts all the way out for a year. But I set my calls out for 2 months because I'm completely fine with it rallying for the next month. We just see a huge rally bringing us up to 590 and possibly 600. Because if we see that, I'm preparing for both scenarios, right? But I'm more strong on the put side because I set it out almost a whole year. And then I'm not that strong on the call side because I set it out for 2 months. But we could have some short-term gains, some short-term pumps. So I'm going to make money on the way up. So then I can close my calls up here, and then I can buy more puts up here, and I can ride those puts all the way down. And now I'm double the profit in both sides. So either way, I win. And that's kind of like how I like to do swing trading. And I really do not like to do swing trading because you have to do it so complicated like that. That's why I like day trading. But it's neither here or there. Inside of this type of market, it is what it is. But yeah, what I'm seeing here on the MACD for the daily chart, you can kind of see that we were in oversold territory all throughout here. And you can see that here. And also with the RSI, a lot of overselling. But now look, what if the RSI continues to curve downwards? That's what I'm looking. That's what I'm looking at. That's why I have my puts out for a whole year. For that exact reason. I have my puts out for 1 year. Okay? So now when you look at it, you look at the MACD, you could easily tell, oh yeah, we're getting overbuying. This is overbought. This is way overbought. But it can stay overbought for a little bit longer. It can stay overbought for a little bit longer. You can never time the market, but you can definitely predict the direction. But you can't time when it's going to do it. That's why I set it out for almost a whole year for the puts. And for the calls, I got it out for 2 months. Let's say we just completely crash. Well, I'm making a lot more on the puts because I put a lot more money on the puts. So close my puts down there, open up the calls, let them ride up, close them somewhere up here. I'm good either way. If it goes on the upside, well, then guess what? I'll ride the calls all the way up till here, close out on the calls. I got more on the puts, so then I'll go ahead and buy more puts up here, go down, close them out down here, made profits on both ways. So that is my strategy here. Like I said, though, I'm not a financial advisor. None of this is financial advice. Choose your own strategy. But yeah, I'm definitely seeing the MACD looks like it's very, very bullish, very overbought. But like I said, it could be overbought for a little while. So maybe we got one more month, maybe we got a week or two of this, but it's not going to last for long. So benefiting off of it while it lasts. So I do believe we're going to see this reversal here on the MACD. This is on the daily chart, by the way. So let's say it goes for a little bit longer, like mid to late May. I'm definitely seeing this going down. It can even start going down now, but mid to late May, definitely. So, eventually things are going to come down in the market eventually. So it's all about patience. It's all about patience. But yeah, let me know what you guys think about this. Do you think the analysis here is right? Do you think I'm going to get burned in the market? Do you think coming into tomorrow we're going to hit at least 568, at least 570? And then do you think going into Wednesday we'll see 576? And do you think around 2 p.m. on Wednesday we will be paused and not get the lower interest rates and then end up dropping from there? Let me know what scenario you think is going to happen. Or do you think we're going to actually lower interest rates and then get past this level and then past that level? So let me know what you guys think is going to happen. Hit the like button and subscribe if you like the video. Remember, I'm not a financial advisor. None of this is financial advice. And yeah, just let me know how you think about it. And as always, I'll be back with another video.